Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're delving into a hot topic, the debate around whether Ottawa should allow home prices to fall to make housing more affordable. This discussion has been fueled by recent comments from key figures in the housing sector.
Yes, Steve. It seems that the conversation was sparked by Gregor Robertson, the former mayor of Vancouver and now the housing minister, who suggested that increasing the supply of affordable homes could stabilize the market without necessarily needing prices to drop.
Robertson's point is that housing is a significant part of our economy, and a stable market is crucial. However, this view is being challenged by experts like Mike Moffat, founding director of the Missing Middle Institute, who insists that prices must decrease to restore affordability for the middle class.
Moffat's analysis shows that if home prices remain steady while wages grow at a nominal rate, it would take 18 years for affordability levels to return to those of 2005 across Canada. In Ontario and British Columbia, it could take up to 25 years. That's quite a long time for people hoping to buy a home.
Absolutely, Janine. And Moffat emphasizes that the disparity between wages and home prices in these provinces makes it unrealistic to rely solely on wage growth to bridge the gap. He suggests that efforts to build more below-market housing units, while helpful, won't solve the middle-class housing crisis.
Prime Minister Mark Carney also weighed in, avoiding a direct yes or no answer on whether prices should fall. Instead, he focused on making homes more affordable by lowering the cost of building and incentivizing municipalities to reduce development charges.
Carney's approach aims to double the pace of housing starts in Canada, using prefabricated parts and other technological advances to streamline development. This, he believes, would help make home prices lower than they otherwise would be, aligning with Moffat's views on reducing building costs.
But there's also an interesting perspective from Moshe Lander, an economist from Concordia University. He agrees that prices need to fall, but raises the question of whether the federal government should be the one dictating housing affordability, given that many decisions are in the hands of provincial and municipal governments.
That's a valid point, Janine. Lander argues that efforts to lower housing prices could be seen as threatening to homeowners' equity, which many rely on for retirement or savings. This makes it a politically sensitive issue. He also notes that policies promoting homeownership can inadvertently drive prices up.
It's a complex issue with no easy answers. But what stands out is Lander's call for a shift in mindset, suggesting that society should reconsider the narrative that homeownership is the ultimate goal, and instead, embrace renting as a viable option.
Indeed, Janine. As we continue to explore these topics, it's crucial to consider all perspectives and the broader implications of housing policies on both homeowners and renters. Let's turn our attention to the current state of real estate sales in Ontario. According to recent data, sales have seen a significant decline, with national home sales dropping by 9.3% year over year this past March. This marks the largest decline since February 2009.
That's right, Steve. And this drop isn't just a number, it's impacting families across the province. Many homeowners are finding themselves in a precarious financial position as their homes, which are often their largest asset, are losing value while the number of potential buyers is dwindling.
The Toronto Regional Real Estate Board reported that only 5,011 homes were sold in the Greater Toronto Area in March, which is a 23.1% decrease from the previous year. This downturn is compounded by economic uncertainties, partly due to external factors like the U.S., trade war, and tariffs introduced by former President Trump.
It's really concerning because homeownership has traditionally been seen as a solid investment. For many families, their homes are not just a place to live, but a cornerstone of their financial security. Now, with this decline, there's a risk of financial loss that could affect both current and future generations.
The concept of the Canadian dream often involves home ownership, and people have been stretching their resources to buy homes, sometimes with financial help from their parents. But with declining prices and fewer buyers, families may face losses that threaten their financial stability and even their retirement plans.
And it's not just about numbers or investments. For many, their home is their sanctuary. The emotional toll of potentially losing one's home or seeing its value drop significantly can be overwhelming. Parents who have invested in their children's homeownership dreams might now face financial strain themselves.
Absolutely, Janine. It's a delicate situation. While some might argue for market corrections, the implications for families are profound. These economic pressures highlight the need for careful financial planning and perhaps a reevaluation of how we view homeownership in Canada.
It might be time to consider alternative approaches to housing and financial security. Renting, for example, could be a more viable option for some, offering flexibility and less financial risk in uncertain times.
Now let's discuss the findings from the latest Canada Mortgage and Housing Corporation's Mortgage Consumer Survey. It reveals that a significant number of Canadian homebuyers are stretching their finances to the limit. Almost 60% of them are paying the maximum price they can afford for a home. This is a substantial increase from previous years, and it raises some important questions about financial stability and planning.
That's quite concerning, Steve. It seems that many Canadians are feeling the pressure to get into the housing market, even if it means pushing their financial boundaries. For first-time homebuyers, the situation is even more pronounced, with 65% of them paying the maximum they can afford. It's a tough spot to be in, especially for those who are just starting their homeownership journey.
Absolutely, Janine. The data also indicates that this trend varies across provinces, with British Columbia and Ontario leading the way in terms of buyers paying their max. In British Columbia, 66% of buyers are at their financial limit, closely followed by Ontario at 64%. This suggests regional differences in housing affordability and market dynamics.
And with 51% of mortgage holders having trouble making debt payments, up from 42% last year, it's clear that many are feeling the strain. First-time homebuyers, who often have less financial stability, are particularly vulnerable, with 60% struggling to meet their debt obligations. It's a reminder of how precarious the situation can be for new homeowners.
Despite these challenges, there's a silver lining. The survey shows that 74% of homebuyers believe their home will increase in value over the next year. This optimism could be a motivating factor for many, even as they navigate financial difficulties. It seems that confidence in the housing market remains strong.
That's true, Steve. And it's interesting to note that more homebuyers are prioritizing energy-efficient homes and renovations. With 61% of buyers looking for energy-efficient properties, there's a clear trend towards sustainable living. Such investments can enhance the value of a home and provide long-term savings on utility costs.
Yes, Janine. Investing in energy-efficient updates can be a smart financial move, especially in uncertain economic times. Additionally, the interest in constructing secondary suites is growing, with 1 in 10 homeowners expressing interest. This could provide additional income streams and help with mortgage payments.
It's all about finding ways to make homeownership more manageable and sustainable. Whether it is through energy efficiency or generating extra income, these strategies can provide much-needed relief for homeowners feeling the pinch.
As we wrap up today's discussion, it's clear that while many Canadians are stretching their finances to the limit, there's also a resilient belief in the value of homeownership. As always, careful financial planning and an understanding of market conditions are crucial for navigating these challenges.
Absolutely, Steve. And remember, listeners, Real Approved is here to help guide you through your mortgage journey. Whether you're buying your first home or refinancing, their experienced team is ready to provide personalized support every step of the way. Visit realapproved.ca to get started.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.